Here with our trades is Brian Vendig. He is president of MJP Wealth Advisors. And up first is Carvana. Shares there are up nearly 7x in the last year. Stock soaring about 33% intraday after posting its first ever annual profit. Brian, this stock was $360 2.5 years ago. So can you buy it here?
Well, John, I think, with the pop that we're seeing today, it's one of those stocks that I would say might want to consider selling on the news, just because, the enthusiasm for the stock is because it posted its first annual profit. But when we think about Carvana, and like you said, the volatility in the price, it's because it's so tied to the cyclical nature of what's going on in the economy. And considering that we're still in a high interest rate environment, and there's some questions about the consumer moving forward, I think this is one where we'll traditionally sell on the news here.
Okay, up next, speaking of volatility, Supermicro. Shares of this up more than 9x in the last year as part of the AI chip excitement driven by NVIDIA. Brian, what's your trade on Supermicro?
Yeah, Supermicro, I mean, look, from a longer term point of view, definitely this AI trend is going to play out over 5 to 7 years, I think. And Supermicro is unique. It fits in the space where it's offering those high-end servers, focusing on that AI infrastructure. But with such a run that we've seen in the stock and knowing that demand for those GPU servers could come into question over the balance of the year, I'm sorry to disappoint, John, but I think I might have to throw out a sell on this one as well, because I'd just like to get a little bit more information about Supermicro and where it's positioning moving forward, and especially considering it's trying to add in a cooling system to those servers, which still hasn't really taken hold in their numbers.
Yeah, I mean, the move looks crazy, but look at the market cap. It's still under 50 billion, right?
No, I agree. Look, it's a perspective evaluation, John, and thinking about those growth potentials moving forward. So I am not discounting that there's not going to be growth in the technology space coming from AI and a company like Supermicro. But one thing I think you've been talking about is with some of your guests and even on some of your other commentary, is competition could be heating up over the balance of the year. And if that demand waves, that could affect the stock. So I guess what I'm trying to say is short term, take some profits. Longer term, keep an eye out because there might be an opportunity to buy on the dip.
All right. From AI to AF, shares of Abercrombie and Fitch up nearly 320% in the last year thanks to rebranding efforts. Brian, what's your trade on Abercrombie?
Well, Abercrombie is one of those stocks outside of the Magnificent Seven that's actually outperformed when you compare it to NVIDIA, believe it or not. And this is a company that actually has provided some durability in what they've been doing and running their business. So yes, they're in the retail space and sensitive to consumer demand. But when you think about some of the announcements that they make earlier in the year and earnings are upcoming, they've really focused on controlling their inventory, improving their profits and their cash flows. And for those reasons, in a place where their products seem to be in demand for their consumers, this is one I think it's worth taking a flyer on and a buy as we head into earnings early next month.
All right. Well, one of the three gets the nod. Brian Vendig, thank you.